Strategic accounting. Accounting is an essential discipline in business, providing the foundation for financial decision-making through the systematic recording, analyzing, interpreting, and reporting of financial transactions. This comprehensive overview will cover the basics of accounting, including key concepts and advanced financial metrics such as net present value, NPV, weighted average cost of capital, WACC, cash flows, and bonds. 1. Basic definition and purpose of accounting. Definition. Accounting is the process of recording financial transactions pertaining to a business. It involves the process of summarizing, analyzing, and reporting these transactions to oversight agencies, regulators, and tax collection entities. Purpose. The primary purpose of accounting is to provide financial information about a company, which is used to make economic decisions. This information helps stakeholders, including management, investors, and creditors, assess the company's financial performance and make informed decisions. 2. Key components of accounting. Financial statements. Balance sheet shows the company's assets, liabilities, and equity at a specific point in time. Income statement provides a summary of the company's revenues, expenses, and profits over a specific period. Cash flow statement analyzes the inflows and outflows of cash, focusing on operating, investing, and financing activities. Accounting methods. Accrual accounting recognizes economic events regardless of when cash transactions occur. Cash accounting recognizes revenues and expenses only when money changes hands. 3. Net present value. Definition. Net present value is a financial metric used to assess the profitability of an investment. It calculates the difference between the present value of cash inflows and outflows over a period of time. Application. NPV is used to evaluate and compare the profitability of various investment opportunities. A positive NPV indicates that the projected earnings generated by a project or investment, in present dollars, exceed the anticipated costs, also in present dollars. 4. Weighted average cost of capital. Definition. WACC is the average rate of return a company is expected to pay to all its security holders to finance its assets. It is calculated by weighting the cost of each capital source, common stock, preferred stock, bonds, and other long-term debt by its proportion in the overall capital structure. Purpose. WACC is used in financial modeling to discount future cash flows to their present value, which aids in investment decisions. 5. Cash flow. Importance. Cash flow, the total amount of money being transferred into and out of a business, is a crucial indicator of a company's financial health. Positive cash flow indicates that a company's liquid assets are increasing, allowing it to settle debts, reinvest in its business, return money to shareholders, pay expenses, and provide a buffer against future financial challenges. Types of cash flows. Operating cash flow. Cash generated from core business operations. Investing cash flow. Cash used for investing in assets, as well as the proceeds from the sale of other businesses, equipment, or long-term assets. Financing cash flow. Cash received from issuing debt and equity, as well as the cash used to pay dividends and repay debt. 6. Bonds. Definition. A bond is a fixed income instrument that represents a loan made by an investor to a borrower, typically corporate or governmental. A bond could be thought of as an IOU between the lender and borrower that includes the details of the loan and its payments. Components. Face value. The principal amount of the bond that is paid back at the end of the term. Coupon rate. The rate of interest the bond issuer will pay on the face value of the bond, expressed as a percentage. Maturity. The date on which the loan amount principal becomes due and is paid to the investor. 7. Advanced applications in business. Using NPV and WACC, businesses can analyze the viability of projects or investment opportunities. This involves forecasting future cash flows and discounting them to their present value using WACC. Budgeting and forecasting. Cash flow analysis helps in budgeting and financial planning, providing insights into the amounts, timing, and certainty of future cash flows. Debt management. Understanding bonds helps businesses manage their debt profiles by choosing appropriate terms and rates that align with their financial strategies. 8. Conclusion. Accounting is a vital function in any business, encompassing a wide range of activities from the basic recording of transactions to complex financial analyses used to inform business strategy. Mastery of both foundational and advanced accounting principles is crucial for business leaders and finance professionals to drive their organization's financial health and strategic decision-making. This comprehensive approach to accounting ensures businesses can operate efficiently, comply with regulatory requirements, and achieve their long-term financial objectives. Useful expressions. According to our latest financial statements, our revenue has increased by 15% compared to the last quarter. We need to update the balance sheet to reflect the recent asset acquisitions. Let's review the variances between our budgeted and actual expenses to identify any areas where we can reduce costs. We must ensure our capital expenditures align with the approved budget to avoid overspending. Please send me the detailed transaction report for last month by end of day. Please advise on the compliance aspects of our new investment accounting methods. Could you confirm whether these figures have been reconciled with our bank statements? We need to cut costs in some areas. We need your go-ahead to process this refund. We should consider adjusting our pricing strategy based on the gross margin trends identified in the recent accounting period. The payment from the client hasn't shown up in our system yet. Our cash flow projections indicate a need for stricter credit control to maintain liquidity. Let's go over our profits from this month. The accounting department will be implementing new software to streamline invoicing and payroll processing. Can you update the expense report today? Our adherence to stringent accounting practices has allowed us to maintain a strong financial position despite market volatility. The financial forecast incorporates both historical accounting data and projections for the next fiscal year. Record each transaction in the ledger as soon as possible. Let's go over how to record adjustments for prepaid expenses and deferred revenue. Always double-check the figures before closing the books. Understanding the fundamentals of accrual accounting is crucial for recognizing revenue correctly. Please confirm you received the invoice I sent. We have prepared all requested documentation for the annual audit, including ledgers and bank reconciliation statements. Please check the receipts against our records. Our accounts payable team will verify the invoicing discrepancies and ensure alignment with our accounting records. Don't forget to submit your travel expenses by Friday. As per our payment terms, the invoice will be processed 30 days after receipt and confirmation of goods. We should start budgeting for the upcoming project. We noticed a discrepancy in your last payment and are investigating to ensure accuracy in your billing. How much did we spend on marketing last quarter? Our quarterly review shows a strong cash flow. Let's discuss the financial outlook for next year. Let's schedule a meeting to plan our financial strategy for the new year.